Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail, and with me is Jeff McCartney. Jeff is a wealth advisor at Scotia McLeod. Jeff, let's talk about some of the kinds of insurance that are available to help protect you against the costs of a serious illness. Let's start with critical illness insurance. First of all, what kind of critical illnesses will this kind of insurance protect you against?
The idea with critical illness, it would be to cover illnesses like cancer, heart attack, stroke, multiple sclerosis, blindness, Alzheimer's disease. So there's a broad array of illnesses.
Okay, so I'm diagnosed with one of these illnesses. How does the insurance work?
Well, essentially, you would approach your provider, your insurance provider, once you've been diagnosed with the illness, and assuming you survive, in most cases, 30 days, they would pay out a lump sum to you that you could use for whatever purpose that you needed it for.
Okay. Now, what amounts of coverage do people typically take for critical illness?
It could range from $50,000 to $1 million. Okay, so it's going to depend on their economics.
Okay, so it is feasible to buy like a small $50,000 policy just to cover off, a few assorted expenses.
Yes, a good example would be to pay the rent for a couple of years, okay, if you were recovering from, say, cancer.
Right. Now, disability insurance, that is a kind of coverage that some people have through their group plans at work, correct?
Yes.
And how good is that coverage, your group plan coverage?
I'd say lucky enough to have a group plan through work, I think that's great. Some people don't have it.
Okay, now let's talk about those people. Those would be business people, entrepreneurs, people who work for themselves. Lay out the basics of disability insurance for me.
The basics of disability insurance are, if you do not have disability coverage and you are concerned that you might not be able to work at some point because of an illness, you would approach an insurance provider to apply for it. And basically what the insurance company will do, they'll look at your current income level. You will apply for probably a percentage of that income in coverage, and then they will evaluate you based on your occupation classification. And that is going to range from a high occupational classification, which means you have a high level of education and probably a low risk of becoming disabled because of how you work, and to a lower occupation, lower income. You're more likely work potentially in an industry where your job is physical, and as a result, your potential to get injured and be disabled is higher.
Jeff, talk to us about the intricacies of disability insurance and in terms of what you're expected to do while you're disabled.
Okay, there are a couple of things, and this applies to both group and individual policies to be aware of, and it's the classification. Let's talk on the group side because it applies to a lot of people. For the first 24 months, in most cases, for the first 24 months, the definition of disability applies to your own occupation. So if you can't do the job requirements of the occupation that you are currently working in, the insurance company will provide you disability benefits.
And then after 24 months?
First 24 months. After that, in a number of cases, that's why it is worth reviewing your group policy, okay, it converts to what's called any occupation, which can mean a number of things depending on what your policy says and why it's worth reviewing, because any occupation may mean if you can go back to work, then not necessarily in the job that you've been trained to do,
but any particular job.
You could find your benefits taken away. Now there's more to it than just it's cut off. You have to review your policy and find out what the insurer provides.
Definite levels of coverage for disability, and it's worth checking. All right, many thanks, Jeff.
Okay, thank you.